Good day. I know that I want to say good day to you guys, and before I start my analysis, I would like us to really see what happened last week. From the analysis we did last week, let's look at 4 hours. From the analysis we did last week, I told us to play safe. In order to play safe, we should place our buy on 1259.63, and we could see that we achieved our profits as of last week. And now we could see that price has hit a zone, a resistance and also a support zone, which I call a rejected zone and a very important zone. Right now, before we go on, I would like us to start with the monthly charts. With the monthly, we can see that there's a lot of things we can see here. Right now, remember last week I told us that we are having inverse head and shoulder forming, and that 127 is also a bridge to that. So there's a possibility that price might hit 127 and pull down, and also there's a possibility that price might hit 127 and the bulls will take over. So, but for now, we can see that price at this daily chart, price is really at a zone where we can say is in a flag zone, in a red flag zone. So, looking at this thing now, looking at this chart, we can see that price is really forming the inverse head and shoulder. If I may say, looking at this now, we'll say this is a shoulder and this is a head. Someone might say it is not true because the two, we have two shadows which are also which also we can call two bottoms, right? Now that is true, but if we look at this from using our line chart, we can see that this is really head and shoulder forming. And looking at it with our candle also, you can see that this place is the close and this is the close of this. So we can say really this is a head and shoulder. So right now, but we cannot confirm that without the shoulder being complete, because we already know that this yellow line that we are seeing here is the neck. And now, though that we still have about 11 more trading days to go for this month to be over, we cannot really determine that this is a reversal candle forming. Okay, but for now we can say yes, this is an inside bar. But from what we see and the fundamentals that we have coming up this week, I will say that we do have a lot of bomb that's about to be explode this week. Remember, this week that is coming, we are having FMC, we are having there's a lot of news coming out, but the most important is the FOMC that is coming out this coming week, which will determine, we will now know what the Feds have in mind. But for now, nobody can predict, because we cannot even predict the ECB. We cannot even predict the BOC. We can see what happened last week. We can see what happened with the GB. You see, nobody expected for the central bank to tell us that they are going to increase rate before they are going to increase rate earlier with what the market is expecting. So anything can happen. So nobody can really predict the market. So for now, we can only predict what we'll see on the chart. So with this now, we can see that we have two options here now. Being that the month is not yet ended, we still have 11 more days to go, and this coming week is loaded. This week is loaded. So there's a possibility that this price might pull down, being that one, we are on the red zone, red flag zone, price has touched it, so there's a possibility of pullback. So for now, we have to be cautious. And also, if I should be looking at it from the bullish angle, you can see that these two bottom has not really done its work. We can also see that this is a reversal candle at this level, 1233.65. This is also a bridged reversal candle at this level, 1233.65. And now we are now having something similar to this at this level, above that level. That is a very, very important level. So I believe that anything can happen, but with this one double bottom, two bridges and closing, and also now a touch, I think the bulls still have the momentum. But for now, they are all waiting for this coming week in order to determine if really they're going to hold on to their horns, or will the bears use their nails to pull it down. So right now, looking at this monthly chart, we can say that we should be on alert, waiting to see what will happen at this level. For me, anybody that is trading on a long term, in order to be in a safe zone, you can place your buy above this 1290.50 to be in a safe side. That means you got to wait for this place to be broken, for price to break through this 1290 in order to be sure of 1324, because that's the next target. Well, you know, it is not something that will happen in one day. It's not something that will happen in 2 days. It's not something that will happen in 1 week. It is a month thing. So for now, being that we still have 11 more days to go, so we got to be very, very alert and also watch. Don't forget that we have three things that are showing us that the bulls are still here. Okay, we have double bottom, we have a reversal candle that touches that rejected 1233.65. we have a bridge at 1233.65. we also have a touch, and now price at a red flag zone. So we should be very careful and watch that. So let's go to weekly. Now, sorry, let's go back to daily. Let's go back to that monthly so that I can show you something. Looking at this now, we can also see that there's a possibility of a triangle there. There's a possibility of a triangle. If I may say and show, we can see that this is a low. Okay, join in with this. You can see that we have a triangle. Okay, we have a triangle. So it is a triangle. You might not see it, it's a triangle, but it is a triangle. So there's a possibility that we might equally see price coming down to this place. Okay, so now this place also has turned to be a very crucial level at 1179. So anything can happen. Okay, so let's go now to weekly. So voila, you can see now that price has really defined itself. Looking at this, you can see price has really defined itself. There is no doubt any trader who sees the reversal candle can prove to himself and tell himself that this is what is going to happen. But not on gold, because gold is, I don't know what to quantify or qualify gold, because gold is not something that you can stick to and say reversal candle can hold. Just like as I said earlier, that this coming week is full of bombshell expected to be exploding within the week. So looking at this now, without going further details, without going for long stories, this is a neck. This is the shoulder that is forming. This is the double bottom. This is the rejected level. Okay, look at it. If you can watch this, this is a rejected level. You see? So looking at this now, you see that in the monthly we didn't see this, but we saw a close above it. But now we are seeing a bridge. Now we have two bridges, two reversal bridges at this same level, 1233.65. Now look at this. We have a reversal candle confirmed in the weekly chart. A reversal candle confirmed. This is a reversal candle now that has been confirmed. Look at the reversal candle here, and this is the confirmation candle. So now, but the problem we have is the candle. This candle closed just below the 127, but touch the 127, but close below it. If you look at the high of that, you see that if you look at the high of this candle, you see that the high is 1277.62. Then the close is 1276.34. So you can see now that this candle, looking at it, is a reversal candle. So probably the next candle that will come out will want to pull back half of this candle, or it will pull back to this level, and then voila, the up move starts. Okay, but for now I am only saying because that is the normal thing that happens. I can show you an example of this. I can show you an example. Look at this. This is an example. I can show you an example. I can show you an example of this where a candle reversal happens and you see a pullback and then see the price heading north. Okay, look at this now. This is a reversal candle. Okay, let me not use that. Let me use a square so that we can understand what I'm saying. This is a reversal candle now. Okay, did you see these two hammers here? These two hammers happen. When it happened, one is, look at, that's the support. Okay, support and resistance level, and also here is also a support and resistance level. Then you now see that when it happened, you saw that the next candle, this happened, the confirmation candle came down, didn't close below the low, went back, the next one opened, went again, didn't go below the shadow, and returned back and now started the move. So that equally can apply here. So we got to be very, very careful. So looking at this now, to be on the safe side, if we are trading this, don't forget, look at the trend line, price touches it, and now we still have an opening here. Okay, but now we can see that opening, there's a possibility that it might not happen, price might not come back here. There's also a possibility that by Monday, price might open and decide to go down and hit it before it will now go up. But for now, looking at this is the reversal candle coming from a bearish move, having a reversal candle, but we know that the wick didn't have the momentum. The wick didn't have the momentum, just like as gold normally has. It didn't have the momentum. It was a gradual process that this price had to hit here. Now showing us that that's a pullback. And if we should check that, with our Fibonacci, we can see that this is a move that happened and now is trying to give a pullback, which we can see that 50% is here. Okay, the 50% is at 1315.65. So that's a possibility. There's a possibility that price might pull back to that level. That will be if price should break through 1277. Okay, so there are a lot of things here that we can see that is telling us that price is still price is still bullish. Remember, this is 1, this is 2, this is 3, and this is 4, head and shoulder. Okay, so we should be very careful, very careful. Remember, this is the neck. We are expecting price to hit here. Okay, we are expecting price to hit here, but before I let you totally believing that this is what is going to happen, let's check if we have any openings. Like now, let's use our trend line. As we can see here now, you can see that 50% is possible. There's a possibility that we can see price hit here and move down. Okay, if there's a possibility that price will hit here at 1315.63 and the price will go down. Why? Because this is a resistant trend line. This is a resistant trend line which price will always want to respect. And you know that majority of the traders who trade today use trend line. So you look at it that people will respect, the traders will respect that trend line. So looking at this now, we shouldn't neglect 1315.165 level. Is a very crucial area to watch. But for now, I can only say, looking at this now, we should wait for price to open, because there's a possibility that price might open with a gap down. And when it opens with a gap down and start moving down, we can place our buy above this at 1286.23. okay, to wait for the price. And our TP should be 1.1315.65. okay, in order to be on the safe side, we need to allow 127 to break and be confirmed. So this, with all this that we have seen here now, remember that I'm not ruling out. That price may not move down. Remember that this third week of the month is filled with bombshells. It's filled with fundamentals, important fundamentals that are going to be coming out from US. And mind you that US economy is growing. US economy is coming back, coming out of recession. Is getting back. It's getting back on its feet. So anything can happen. So, but for now, looking at this chart, we have a reversal candle. That's the basis. We have a reversal candle, which traders or investors would like to respect. So where we should be on alert is if eventually price should break through 1277, we should be very alert on when price hits 1315.65. okay, now let's go to daily. Wow, we can see that we have a lot of things here in daily already. This butterfly, this bullish butterfly has been what we've been following since last week, and now we see that it has completed, and this last week pulled it up, okay, which it is a normal thing that it's ought to do as a reversal pattern. Okay, so now looking at this, now there's something new that we added to this. We can see that we have a falling channel. Now we have an opening here, which is very crucial. We have an opening here. We can equally see that price closed below 1277 level. We can also see that this is a bullish butterfly, which will push price up. Now this is the opening that we have here, okay, which is about say about 103 pips or 104 pips for price to hit the resistance trend line, the up resistance trend line. Okay, so now we can equally see that everything is also coming to that same, the bulls having the strength, building up the strength for the up move. So now I don't need to start going further to start explaining. The only thing that we can see here is that if you look at this line now is the 200 moving average, and this is the 50 moving average. And if you look at it now, you see that this is where the 50 cross from below. Okay, cross from below, causing this up move, but could not hold, and price could not break through. Price break and breached it and returned back. And now we see price it coming down. And now look at what is happening here. We can see that that both MAs crossed here, which is pushing this price down. And also now we can see that the 50 is also planning to cross up again, but still there's still space, so anything can still happen. So there's a possibility that by this coming week, if the fundamental that comes out from US should be against dollar, that means this 50 will cross over, and when it crosses over, we should be expecting price to be flying. So but now we are looking at, this is the chart we are looking at. What we are looking at is this right now. What is the chart telling us? The chart, the candlestick is telling us that 127 is still the red flag zone. We know what we went through here before it could break. We saw some rejections. We saw some reversal candles forming, and everybody was like saying it will go up to come down. It will go up to come down. But we finally, when the news break, we saw what happened. We had a very long spike, which breached the 127 and then closed below it, and then opened and then continued it down. But now we have market just at its mouth. So looking at this now, we can see that, if you can see, this is a struggle. A reversal candle and it will go up, a reversal candle and it will go up. So there's a possibility that here now by Monday we can get a spike up to this level, and then with that spike we still have a down move that will now give us a reversal candle that will push this price down. Remember that we have something like, I would say, something that is forming like, if I may say, something like I would say something like 1, 2, 3 magic number, which we all know what that means. If I can use this, okay, we all know what that means. Okay, now if we can look at it from this angle, we can see that this will be the completion of the magic 3. We can, say that this is 1, this is 2, and this is 3. Okay, so you're looking at it now, you can see that this space here is also an angle where we can be able to see that price is having a possibility of going down. So we have to be very careful, because this level now is also 1285.06, which is a very crucial level. So we have to be very, very careful. And also don't forget that we have 2 MAs, 250, which are about to cross. So there's a possibility that if price hits here, we will see some rejection there, or we will see a whipsaw. So we got to be very careful. If we are placing our buy, we should place it with using number one rule. Remember that our number one rule is you follow your trend, you follow your profit with your trailing stop, or you move your stop loss to protect your entry point in case of any whipsaw. So now we can see that we have this 1 2 3 magic number. Also we have it 1 2 3 magic number below. So but the only difference now is that the down part has completed but the up has not. So there's a possibility that if price should come here, there's a possibility of it breaking through. And moreover, remember that whenever we have this down candle, whenever we have this down channel, it also signifies that the bulls are loading, that the bulls are loading up. So whenever you see a down channel, it is about 70% sure that price is going to move up. So we should be very careful, and we should follow. We should wait for this break, for the break of 1277 level, in order to confirm if price is going up. But for the meantime, we can place our buy after the open. You wait for the open, please. You wait for the open. You wait for the open. When the market opens on Monday or on Sunday night, please, you wait for that candle that is opening to close in order to confirm the break, or to confirm if price is going down. So if price should open jumping down, that's giving us a down gap, we should place our buy at 1279.01 and our TP at this level. Our TP should be at 1287.22 level. Now when our profit is at that level, then what we should do is to wait. When price hits it, we should relax in order to confirm the break of this resistant trend line, in order to confirm if really price is going to continue going up, or is it going to give us a reversal candle at that level in order to go down. Now let's go to 4 hours in order to be sure of what we have just discussed. Okay, you can see that in 4 hours we don't have much to say here. It has everything has been going as said from the onset, from the daily, from the monthly chart. We could see that everything is still at the stake of the bulls. But there's one little thing that is in these 4 hours that may cause us to start thinking of saying there's a possibility of price going down. Now, looking at this now, we could see that we had ABCD pattern which has completed its move. The bullish ABCD pattern has completed its move. Okay, it's complete. But now what we are still facing is that same 12770. So but now looking at this, if you look at this, you see that we have a reversal candle all formed below the 127 red flag zone, but price closing just below it. And also look at this. We should look at this. Look at this is a swing, okay, of this reversal candle. I will call this a doji with a long swing. And now you see that price gave only a whipsaw, coming back below the high of that swing of the doji. So it signifies a lot. You might look at it and say it doesn't matter. It matters a lot. But where I would say the bulls still have the upper hand is that, if you remember, when I came to this level, there's a trend line that was not complete. I completed it, and look at this now. You can see this trend line, okay, and you see that this is a break, okay. candle has broken through this resistance trend line in 4 hours. In 4 hours. But the only problem now is that 127 is holding it back. So we wait. At this moment, we will say this is not yet a break. It is a breach. Price breach this level. So what we should do now is to have patience. We need a lot of patience in order to confirm this market. Don't rush in. There's no need of rushing. Where are you rushing to? It's not a race. Trading is not a race. We should relax. Have a cup of coffee whenever you are trading. Have a refreshment always beside you. Relax. Just wait for the candle to confirm itself. Wait for the candle to confirm. Like this now, what we should do here is, let me show you. Let me explain something. Let me just show you why I believe solemnly that this is still a bullish move. Right now, from the monthly, we saw inverse head and shoulder. We saw two bottoms, which has not completed. We saw price breach 1233 level 2 times. Okay, now head and shoulder, will I say the right shoulder is not yet complete, or the left shoulder? I don't know which of it you can call right or left, but I know it's a shoulder. The shoulder is not complete. Okay, so now we go to weekly, we see a reversal candle. We go to daily, we see that price is fully on bullish. We saw the MAs showing us that price is also bullish. Though that whenever you are trading with SMA, we are always told that whenever price is below it, that means price is bearish. But now we are looking at it technically on candle basis, that price is bullish. So, but now we are in 4 hours. We now see that ABCD pattern complete, doing the normal work it's supposed to do, pushing price up after the completion. That's why it is called ABCD bullish ABCD pattern. Okay, that is why it's called bullish ABCD pattern, because after the completion, next thing you will see is price shooting up. And now let me just say, let's give ourselves some target. Let's just see if we can see or predict our target. So now let's use our Fibonacci. Our Fibonacci from here, from the C level to the D level. Okay, from C level to the D level, we can see that, remember that there's a rule that states that whenever you have price having a sharp move down, you always expect to have a 50% retracement. Okay, 50% retracement. And we're looking at this. So now, if you look at this with this rule that I just said, now you can see that we have a 50% retracement completed. Okay, a 50% retracement completed, but price just is dancing below it. So there's a possibility that by next week we might see movement down, and also by next week we might see price shooting up to this level. Okay, 86.10. So we should be very, very careful. So the only secret about this now is we will wait. We have to wait for 1277 to break. Also, to confirm this break, to confirm this break, what we should do is to wait for this breached resistance trend line for price to open and close above it. So invariably, for us to confirm this break now, price will come here, touch this level, and pull back to this level, to 1268. Then at 1268, if price should close at this level and pull back, touch 1277 or 1268, then and form a reversal candle, then that is when we'll now be sure that price is heading to 1313.425. Okay, and there's something I want to say here. I remember I said this year that I'm expecting gold to move to 1415. And I keep on saying that the room is still there. The room is still there. There is still big room for that to happen. But I'm not saying that I'm 100% because I don't know what the fundamentals of tomorrow will be. But from the look at my candlesticks, the look at my trend, I can see a positivity to that move. So for now, we only trade what we see. And for now, what I am seeing is that I have signs showing that the bulls are loading up. So for now, we should trade what we see, and for what we see right now, we are at red flag zone. So we got to wait and confirm our price before we take a position. I pray that this will help us, and I'm going to give a signal on this, so you can always remember I say, please don't rush in. Wait to confirm the pullback, or wait to confirm the breakout before we take a position. Thank you.